Platinum supply heading into another deficit, and the World Platinum Investment Council Director of Research, Edward Sterck, is here to tell us all about it on this episode of Silver Bullion Television. Hello again, everyone, and welcome to another edition of Silver Bullion Television, SBTV. I'm your host, Patrick Diarra, part of the outreach team of Silver Bullion here in Singapore, where we want to help you truly secure your wealth. Edward Sterck, Director of Research for the World Platinum Investment Council, joins us today. Edward is here to give us some insight and outlook for platinum heading into the Shanghai Platinum Week 2025. And we're delighted to have Edward join us once again. It's time to saddle up and silver up for Edward Sterck. Edward, welcome back to SBTV. How are you doing?
Very good, thank you, Patrick. How are you doing?
I'm doing fine. Thank you for asking. Edward, you are heading into Platinum Week over in Shanghai. Can you tell us what goes on at these types of events?
Absolutely. So, it's Shanghai Platinum Week. It's the fifth annual iteration of the event. We've got London Platinum Week in Europe and New York Platinum Week in the US, and so this is really an event that's obviously catering to the Asian audience and obviously China in particular. It's important to remember that China is the biggest consumer of PGMs globally, and so therefore it's an extremely important market in terms of identifying end uses and demand trends, and establishing sort of the market value for these critically important metals. It's quite a difficult market to understand from outside of China, and my experience of going and traveling and speaking at different conferences within China is that actually the rest of the world is often quite difficult for the domestic Chinese end users to gain a good understanding of as well. So Shanghai Platinum Week is really it's a forum to try and bridge those gaps and improve just global understanding of each other and our wants and needs. In terms of the structure of the event, there's sort of a 2-day seminar. So that's the Tuesday and the Wednesday, which consists of speeches, presentations, and working panels and so on. And that's live streamed within China. And just a little statistic for you here. Last year, the Tuesday was live streamed within China, and that was watched by 470,000 people for an average of 7 hours each. So that just highlights the importance of these metals to the Chinese industrial complex. And then on the Thursday and Friday, and actually moving into the Saturday, we do a series of site visits to automotive companies and their construction facilities, and then also we're ending up in Hubei and Shenzhen, which is the center of the fabrication and wholesale Chinese investment and jewelry market. So hopefully an awful lot to discover, grow our understanding, and we'll be posting regularly on LinkedIn throughout the week to help get that news flow direct from the source to interested third parties.
I want to start off with something Bruce Ikemizu from the Japan Bullion Market Association said when he was here in Singapore for the Asia Pacific Precious Metals Conference. He said other people from other countries are asking him where can they obtain physical platinum. Edward, how tight or not is the market for physical platinum?
So there are a number of different indicators one can look at in different parts of the world to get a feeling for how tight the physical market is. So if you look at lease rates, for example, so that's the cost of borrowing metal over a short period, so 1 to sort of 3, 6, or 12 months. And lease rates have been extremely elevated since the sort of end of the fourth quarter of last year, and have remained at levels that are historically fairly unprecedented, bar brief spikes during COVID and things like that. So we're talking about annualized rates of 15% plus your credit spread in some cases for borrowing this metal. So that's a real indication that there's a shortage of metal in the prompt market, and anyone looking to borrow is having to pay up in order to gain access to material. You can also look at the shape of the forward curve. So if you look at the forward curve in Europe and in Japan, it's in quite strong backwardation, which is again a signal that there is a shortage of metal in the prompt market. So tight market conditions. And then finally, the secondary market in China. So outside of the SGE, there's a lot of transactions that occur in China on an OTC basis, and there's been some pretty significant premiums for that metal just because there hasn't been adequate availability of platinum from other sources. So, I mean, the answer to your question is, I can't really give guidance on where to go to find metal, but we are just seeing that there's a number of indicators around the world that there is currently, at least in the near term, a shortage of metal, and that's driving those tight market conditions.
Yeah, because with silver, we're often told, there are stockpiles of silver. So when there should be a deficit, industry, governments, or whoever it may be, they'll go into these stockpiles. Is it the same with platinum? Are there platinum stockpiles all throughout the world that governments have?
Well, I mean, I think it's worth just sort of taking a step back and highlighting that any commodity market, any healthy commodity market, has stockpiles of some form or another. If you look at, for example, copper or aluminium traded on the LME discloses warehouse inventories, and that's part of a normal, healthy, functioning market in terms of providing liquidity. And so for platinum, that's the same. Effectively, if you look at our numbers, we had strong, almost million ounce deficits out of a roughly 8 million ounce per annum physical market in 2023, 2024, and this year we're looking at something similar. And it's only this year that the price has actually reacted to those shortfalls. So, clearly over the last couple of years, above ground stocks have been a balancing factor. And I guess that what we're seeing at the moment is that those above ground stocks have been drawn down to a level that's either unsustainably low, or the holders of those residual above ground stocks have sort of value expectations that are above current pricing. And so they'll only make those ounces available under the right economic scenario for them. So I think, kind of coming back and tying this back to the previous question, above ground stocks are definitely a normal functioning part of the market. But presumably looking at those tight market conditions, they have fallen to a level that's unsustainably low.
With platinum supply, I was looking at a chart from the mines anyway. South Africa and Russia really way ahead of most others. Um, from your research, are those mines in good health considering the geopolitical tensions and sanctions and even the tariffs going on?
So, addressing the kind of the closing part of your question first, and tariffs, it's probably worth highlighting that critical minerals, including the PGMs, are exempt from tariffs as currently structured. So raw platinum in the form of ingot, sponge, grain, and so on is tariff free. In terms of the mines themselves, we've had a number of years of really, really constrained pricing for the PGMs as a whole. Remember that we're not talking about platinum mines. We're talking about, in South Africa, these are platinum mines with strong PGM byproducts as well as base metals. In Russia, those are nickel mines with PGMs, including platinum, being produced as a byproduct of that nickel output. So you've kind of got to think about what's called the basket price. So it's the holistic price for platinum, palladium, rhodium, the other PGMs, gold, and those base metals. And for the last few years, up until very recently for platinum, pricing has been extremely suppressed. So that's put a lot of capital constraints on the operations. The top end of the cost curve has been in cash flow negative territory. And so the miners have put a lot of effort into trying to restructure those operations and make them more competitive in the price environment that existed for the best part of 3 years, really. I think they've done a pretty good job of that. I think that the fundamental downside risk to supply is pretty minimal. But remember that we're typically talking about deep level underground mines here as well. So whilst we've had this sort of $300 or so bounce in the platinum price, that doesn't mean that you're going to see a mine response. Fundamentally, because they're deep underground, the production flexibility to price is very, very muted, at least over the short term. And so ultimately, especially considering that you've got to take into account the broader economics and the pricing of those other metals, we're unlikely to see any kind of supply reaction from the miners, at least, to higher platinum prices.
Edward, if you don't mind, you mentioned the word suppressed. What, in your opinion and research, why do you think there is a suppression going on with platinum? And I guess we're referring to prices.
Yeah, I mean, look, I don't think suppression is probably the wrong word. I don't think there's any kind of activity in play to try and keep the price down. It's just fundamentally, price is determined by sort of the establishment of value by different market participants. And I guess kind of coming back to those above ground stocks, clearly the availability of those above ground stocks up until, let's say, May of this year when pricing began to move, the availability of those above ground stocks at then market prices was sufficient to keep the market adequately supplied. And so in terms of the ebb and flow of market economics, supply and demand and so on, that's just where markets set price at the correct level. That's just where pricing was established based upon the availability of metal at that time.
And I've also read some reports where platinum was considered to be a critical metal along with rhodium and cesium, I believe it was. Is it still that critical metal as far as things like the speed and development of AI or even computing technology and things like that?
So platinum and some of its sister metals are used in things like the manufacturing of the sorts of semiconductors that are used in large server and data centers. It's also used as a material in the production of hard disks, which are still the favored form of memory storage, particularly for large computing complexes. In terms of really, I guess, kind of moving the needle from a demand perspective, it isn't that big a factor. It's a helpful tailwind, if you like. I think where platinum's critical nature is perhaps more deeply felt is as its broader industrial applications. So as a catalyst for reducing energy requirements and therefore emissions in things like petroleum refining, in the petrochemicals industry, in the as an alloy in the fabrication of high quality glass fiber and consumer electronic glass screens, even in defense applications. So platinum has a number of applications in the defense industry as an alloying agent for high pressure, high temperature turbine blades, for example. So it's broader and wide-reaching number of end uses that result in it being identified as being a critical mineral rather than specifically something to do with AI or computing. Yeah, added to that, you've got really quite concentrated geographic supply, so that has quite a big bearing on identifying it as a critical mineral, because it's not widely available. It's not there aren't PGM deposits in different countries around the world that could be lent upon. It comes from predominantly South Africa and from Russia.
Yeah, because one a question I often get from viewers when it comes to platinum, what what should happen if there's a type of a nationalization that happens with the mines? What would happen then? I mean, what would happen on the investment side, or of course the supply side? But do you even foresee something like that happening?
No, I don't. I mean, it's never been really something that's on the cards at all. South Africa has got, an independent judiciary, good rule of law. You'd have to have a really dramatic wholesale change in the political spectrum in South Africa, which is incredibly improbable to see any action being taken in that regard.
You're going to be in Shanghai coming up, Shanghai Platinum Week 2025. You mentioned the platinum demand for jewelry in China. Can that possibly move the needle towards platinum supply and demand?
Well, I think it already is, really. I mean, things have changed really quite dramatically. If we were talking about jewelry even 6 months ago, I'd have probably said something like flat is the new up for platinum jewelry, because we've seen a whole decade of sequential annual contractions in the jewelry market. But clearly, the price of gold at these levels is having an impact, and it's pricing some consumers out of the market. Not necessarily because of I think the price of gold is too high, but more particularly in markets like China, where you've got a semi-commoditized quasi-investment aspect to jewelry consumption. It's the direction of price risk. So anecdotally from our colleagues in China, they tell me that consumers there have been worried that there's more downside risk to the gold price at these levels, whereas in contrast, they see more upside potential to platinum. And if you look at gold jewelry sales in Q1 in China, they were down 32% year on year. And platinum fabrication was up 26% year on year. So what we're effectively seeing is the fabricators and retailers in China are looking to try and attract customers back who have stopped purchasing gold by giving them other products instead, and platinum is a key beneficiary of that. And it's important to remember that the scale of the gold jewelry market versus the scale of the platinum market is several orders of magnitude different. So even a small pivot away from gold into platinum has an outsized impact on the platinum market and supply demand fundamentals. So what we're seeing at the moment is strong imports into China during April and May. Not record, but certainly elevated in the context of the last 12 months. We're seeing strong volumes trade through the Shanghai Gold Exchange, strong platinum volumes through the Shanghai Gold Exchange. And also, I think most importantly, we're seeing the volumes persisting even though the platinum price has gone up. So previously, purchasing volumes in China have been very price sensitive. Platinum has been locked into, in US dollar terms, roughly a $900 to $1,100 per ounce sideways trading range, and you typically see Chinese buying fade away towards the top of that range and come back as the price pulled back. Now we've seen that range has been broken, and yet we're still seeing sustained buying coming from China. So I think that shows that that there is real demand standing behind this, and clearly that's helpful for the platinum market overall. It's also something that's not just about China. If you look at the white gold market, which is big in Europe and big in North America in particular, we're seeing at the retail level, white gold is being priced at a premium to platinum. Now that's highly unusual. I mean, white gold was originally developed as a product, as a low-cost alternative to platinum. And so for most consumers to see it being more expensive, they're going to naturally go for the platinum ring instead of the white gold option. And that's largely because also platinum is still considered to be a premium product in the minds of the consumers in Europe and North America. So we've seen pretty consistent 3.5% positive per annum growth over the last 10 years in the world ex-China in terms of jewelry demand. And now that seems to be accelerating, particularly helped by the white gold premiums.
Last year, Shanghai Platinum Week, you had talked about green platinum. Any updates you can give us with green platinum?
Well, I mean, this really refers to platinum's use in green hydrogen. So platinum is used as a catalyst in electrolyzers for producing green hydrogen using renewable electricity that electrolyzes water and generates hydrogen as an energy carrier effectively. And platinum is also used as a catalyst in fuel cells to take that hydrogen, recombine it with atmospheric oxygen, and that generates an electrical current. So fuel cells effectively and a hydrogen fuel tank can act as the equivalent of a battery in a battery electric vehicle. The technology is particularly well suited for heavy duty, long distance transportation and any vehicle role where you've got high capacity utilization rates. The reason being that you don't have a long period required to recharge the battery. You just fill the tanks up the same way that you would do with diesel, for example, in an articulated lorry today. So rapid refueling, and so therefore that helps maintain your high capacity utilization rates. As things stand, I think there are a few updates on hydrogen. Generally, it's been happening a little bit more slowly than I think everyone had hoped for a couple of years ago. The US is definitely seeming to be taking a step back from a lot of its green commitments, including to green hydrogen. At the same time, it's probably worth highlighting that we always saw the US as being, and the structure of the support provided to green hydrogen and renewable energy there as being actually somewhat inadequate. So in our numbers, the US did not feature very significantly in our forecasts for green hydrogen going forwards. It's a story that's mainly being driven by China and also by Europe, and to a certain degree, actually, other parts of the world like Australia and the Middle East. So, things are happening more slowly, but they are actually happening. We are seeing projects go through FID, and as those projects come on stream and start producing green hydrogen, you'd expect the levelized cost of hydrogen to begin to come down, and that makes it more competitive as a technology versus other green alternatives. So overall, I think the trajectory is still positive. But we're very much talking about a story that's really going to come to the fore later this decade and probably into the 2030s. I think probably going back to what I said earlier in terms of the availability of above ground stocks being the balancing factor in terms of the market, I think probably the price discovery in the market is very much going to be determined by the residual holders of those above ground stocks and what their value expectations are. Clearly, we've got these tight market conditions, a current shortage of platinum in the market. So I think that ultimately price direction through the rest of the year is going to depend upon the availability of metal, and that balance between supply and demand through the second half of the year.
We have a lot of gold physical investors, silver physical investors, and they're really taking a look at platinum because they're hearing these things about supply and demand, and it looks like they're also trying to get their hand on bullion. So I guess with that in mind, besides the industry, jewelry, the investor demand, just the coins and bars, you see them moving up as well.
Yeah, I mean, I think, if you look at China, China went from pretty much a non-existent investment market for platinum in 2018 to 250,000 ounces last year, and the trajectory this year, is potentially even higher than that. I should caution, we are seeing some headwinds in other geographies. So if you recall, I mentioned earlier about the high lease rates. Those are, not helping the economics for the fabricators of platinum investment products. And so, that may slightly curtail the availability of metal, ironically, at a time when demand is probably going to be at its highest. So, I think there's a bit of likely to be a bit of a sort of two-way tussle there, where we are seeing this quite strong consumer demand for platinum investment products, but there's not necessarily going to be adequate supply of that. So how that translates into market dynamics, we'll just have to wait and see as the year unfolds.
Edward, if possible, could you tell us about any new mines that may be coming online, or the thought of any new mines coming online?
We do have one new mine coming on stream this year. That's Ivanhoe's Platreef project in South Africa. I mean, the timeline for developing this has been more than 10 years, and it's only just coming into production now. So, in terms of mine supply reacting to current pricing, we won't see anything come on as a result of these prices in the very near term. And bearing in mind that making an investment decision to sink a shaft 1.5 kilometers, develop a new ore body, as I said, in Platreef's case, that was a more than 10-year process, and so that's the same today, if not possibly even longer. And so, for a board to make the decision to make that sort of investment, where you've got a 10-year development timeline for a deep level underground mine, there may be some shallower ones that could be a little bit sooner than that, but just using those deeper mines as the benchmark, you've got to be confident that the market is going to be there in 10 years' time for those metals. For platinum, I think that's pretty straightforward. You've got green hydrogen. On our forecast, green hydrogen will be the biggest driver of demand in the 2030s, overtaking automotive and other uses. But then when you look at the sister metals that are byproducts of platinum, for example, palladium, more than 82% of palladium's going into catalytic converters for internal combustion engines. So what does that market look like in 10 years' time? Our estimate is that the electrification of the drivetrain is going to occur more slowly than a lot of other people have necessarily forecast. And so we do expect the market to be there. But as a board, you've got to be really confident in that to invest hundreds of millions of dollars in developing a new mine. And so I think, even though you might have some people like us saying it should be, the market should be there, you've got a lot of other people who are saying, no, we're all going to be driving, metaphorically, Teslas by 2030, which we would disagree with. So it's just difficult, I think, to make the decision to invest so much shareholder capital in something where you've got a fairly kind of grey and difficult to understand outlook for those commodities over the medium to longer term.
All right. Edward Sterck, before we head out, can you let people know how they can get some of your reports and research and follow you as well?
Yeah, thank you, Patrick. So all of our research is available for free at platinuminvestment.com. You can also follow us on LinkedIn, the World Platinum Investment Council, and also connect with me in my personal profile as well. So we publish all of our research, as I said, through the website. It all gets reflected onto LinkedIn as well. And we're here to help and answer any questions anyone might have.
All right. There's a lot of questions out there, believe me. All righty, Edward Sterck, I want to wish you a great platinum week ahead over in Shanghai, and I hope we can do this again soon.
Super. Thank you, Patrick.
That was Edward Sterck, the Director of Research at the World Platinum Investment Council. To get great info on platinum, head on over to www.platinuminvestment.com. If you like this video, please do subscribe, hit the thumbs up, and share. All are greatly needed and appreciated. Audio-only versions of this interview can be found on iTunes and Spotify.